Let's introduce our panel. We've got Gaurav now. We had Gaurav on a little while ago. Marius Rates. Marius, are you there? Somewhere around. Okay, we've got Brenton Nyker from Binance with his lovely Binance slogan there in the background. Hello, Brenton. How are you?
Very well, thanks.
Good. We're hearing you fine. And we've got Ran Neuner as well. Hello, Ran. How are you?
How are you?
Okay, Ran, you're going to be on for a while because you're going to be debating David in a short while about whether we should be investing in cryptos. And if I'm not mistaken, you're on the side of, yes, we should be investing in cryptos as an investment.
No, I mean, I think it's a terrible idea to invest in cryptocurrencies, especially for those people who don't want to make money. I think it's a terrible idea.
Okay. We'll get into that. Okay, Ran, thanks so much for joining us. Ran is a serial entrepreneur, and he's also a very well-known broadcaster in the space of cryptocurrencies. There's a slot on CNBC, which I think maybe you've now gone into YouTubing, and you're building up kind of the Bloomberg of the crypto broadcasting world, where you're going to have a 24/7 channel. So maybe you'll explain that in a little bit to us.
Yeah, I mean, right now, today in the financial system, traditional financial system, if you want to watch or catch up on the news, you would select CNBC or you'd select Bloomberg, and within half an hour, you'd know exactly what's going on in the markets. But if you want the same thing for crypto, it doesn't exist. And so what we're building is we're building a parallel to CNBC or Bloomberg, but it's strictly for crypto. So it's 24/7, 365, streaming credible crypto content, which is accompanied by an amazing website that's full of resources and news and research. And we also, because we understand how intimidating the space is, we also launching a crypto school, it's a free school for anyone who wants to attend. And it really takes you from not knowing anything about crypto right through to being able to build your first portfolio. That's the first stream of our school. The second stream of our school is for people who want to make a living out of crypto, how to trade, how to invest, how to read the fundamentals, how to understand tokenomics, charting, all that kind of stuff. And the third stream of our school is crypto for institutions. How do you accept crypto? How do you reward your customers with crypto? Where do you store the crypto? How do you cash the crypto out? What are the tax implications? So that's the third stream of our school. Everything we do at Crypto Banter is free. And school is free, just like everything else. And our objective is to put 1 million people through school by the end of next year.
Wow, fantastic. Okay, I mean, a couple of questions that are coming in here. So I think if I can ask you to keep your answers fairly brief, and we'll wrap through as many as we can. Gaurav, I'm going to start with you. And the question is, you did kind of address this in your presentation, is if people are investing in crypto, what is a good way to start, and how much of their portfolio should be in crypto?
Okay. Well, I guess I have to put in the usual disclaimer, otherwise my head of compliance will kill me, that I can't give financial advice here. But I think that example I showed is one where you take a portion of the portfolio, and that portion would ideally be something which you're not looking for immediate liquidity. The reason being that whenever, and this will vary for some people, that could be a high number, for some people could be a very low number. Some people, they need their whole portfolio to be liquid because they might need it for expenses that are coming up. And the reason being that the very famous volatility of cryptocurrencies, while a lot of us probably on this panel are very confident about the medium to long-term trajectory of cryptocurrencies for many reasons, whether it's the technology or the asset status or the supply and demand dynamics, I can't tell you what the price is going to be tomorrow. And I can't tell you what the price is going to be a few months from now. So it needs to be a part of your portfolio that you're willing to hold for a medium to long term, because you don't want to be forced to liquidate it when the price is down. That being said, I don't want to give the impression that it isn't liquid. It's obviously very highly liquid. It's just the volatility that you're controlling for here.
Great. And by the way, Marius joined us there while we were going through the introductions. Welcome, Marius, who, for people who weren't here for his earlier presentation, is the General Manager for Africa for Luno, and he's wearing his T-shirt there, his Luno T-shirt, so you can't mistake him. Oh, and Rand
Thank you.
If everyone's going to wear swag,
I don't know what
so
that is. I don't know what that is. That's your face, right? Cartoon.
yeah, me full of crypto.
Brenton, if you can pick up the same thing, and again, sorry, just to preface this and say, none of our speakers here are giving any advice. These are opinions. What should people be? How should they regard crypto investments? How much of their portfolio? You get a sense that people in the crypto space, they're a little bit apologetic. It's so volatile, it's so risky that but yet people like Ran and others, Brenton and Maurice as well, I guess. You're probably all in on crypto. You're much more than the 2% asymmetric upside that you talk about to the more conservative crowds. I know it. But Brenton, I want to hear your opinion about that.
So, again, I think just to reiterate what Gaurav said, I think that on an individual perspective, it really boils down to that individual's needs. Everything from their risk appetite to their current age. What is their investment horizon? But I think what's great about the cryptocurrency sector is that those very, very low barriers to entry allow everybody to essentially make that same decision, right? So I can't tell you whether your portfolio allocation should be at 2%, at 10%. But the great thing is if your net worth is 1,000 Rand or your net worth is 1 million Rand or 100 million Rand, you can still effectively make that same allocation and enjoy the same upside as any other investor in the space. And I think we know at Binance, we try not to dictate to the end users what they should do, but rather provide them with a suite of products that allows them wherever they are in the scale to really be able to access the market and utilize it the way they want. So, like I think some of our other speakers mentioned, if you're a little bit lower on risk appetite, you're a bit of a buy and hold type person, it's simple to go and make a small allocation to Bitcoin. Again, like where I've said, personally, I think you should be making the investment for the medium to long term. But there's also a whole bunch of young people whose risk appetites are far off what our traditional investors look like, right? So they're happy to throw $100 into some of these small cap alts. They're happy to use what some would call very, very dangerous levels of leverage on derivatives markets. So I think the key with the crypto market sector is for people to really understand what the pros and cons are of each sort of product set. And then based on that and knowing who you are as a person, what your risk appetite, etc., is, you'll be able to then utilize whichever product set you see fit. So from an investor perspective, and again, I'm going to disclaim here that this is my own personal opinion, not in any way affiliated to Binance. I do think that it is just quite advisable from an investment theory perspective to have some sort of allocation in your portfolio to cryptocurrency. And,
right.
Your more traditional large cap ones. But if you want to get a little bit more risky, there are product sets in education on Binance that allow you to, whet your risk appetite a little bit more than most people would, I think, dare to.
So at the Binance Academy, right?
Correct. And the platform as well, choked full of educational material.
Yeah. Rand, if you can pick up that question, if I can modify it slightly for you, I think most people's point of entry into the crypto space, they buy a bit of Bitcoin and then they follow that up with Ethereum. Why do they pick those two? Because those are the two biggest in terms of market cap. But I think you have a slightly more logical and systematic way of going about this. And you're a trained, certified financial analyst, so you come at this with a certain amount of logic and investment background.
So I think I agree with both the previous speakers to say that it's a very small part of your portfolio. No matter how optimistic you are about crypto, crypto should, at this stage of the game, make up a very small part of your portfolio. And the reason for that is that it is a speculative asset. It's less speculative than it was 10 years ago, but it is still in the more speculative part of your portfolio. Now, once you've decided what your asset allocation is, whether it's 1% of your investable assets, 5%, or maybe at a stretch, 10%, then the idea is to decide which networks you want to invest in. Now, ultimately, when you're investing in crypto, What you're investing in networks. And it baffles my mind why some people say, should I buy Bitcoin or Ethereum? Because that's like saying, should I buy gold or Amazon? One is a store of value, and the other one is a supercomputing network. And so ultimately, the approach that I would take is to say, either buy a balanced index portfolio of cryptos and get exposure to multiple industries that cryptocurrencies are going to disrupt, such as gold, such as supercomputing, such as file storage, such as banking. So that's one approach. Or start selecting assets, but then you really got to know what you're talking about. You got to know the fundamentals, and you got to have a thesis and stuff like that. But it's certainly not one or the other. It's certainly a diversified portfolio across the entire crypto universe.
Mario, same question for you. How do people typically start at Luno? And of course, Luno was very focused when it started out. You offered Bitcoin initially, and then you expanded it out to Ethereum, and now you've got a few other coins, but you weren't offering, like Binance is, this huge range of different cryptocurrencies. You were very focused. And maybe explain why you did that.
Dr. Kieran, I think maybe just first off, I think crypto isn't a get-rich-quick scheme. Now, I know this is an investment conference, but there's no silver bullet coin that if you earn this coin, you're going to 10x your investment in the next 2, 3, or 4 months. I think a lot of people want short-term gains, and they become greedy, and they think crypto is going to provide them with that type of return. So that's the first thing. The price isn't guaranteed to only go up. The price will come down, and we've seen that many times in the past. So if you don't own cryptocurrency currently, but you're interested, then you've got a bit of homework to do. I think the fact that you attending this conference is a good start. So thanks to everyone for making this possible. But you first really need to do a bit of basic understanding. And there's this unwritten rule that you need to spend 1,000 hours on a subject, on a topic, to understand it before you decide to allocate any funds or invest any money. 1,000 hours is a lot, and maybe if you don't have 1,000 hours at hand, you can go to Luno's trading portal just to understand the basics around why we all get excited about crypto, and especially Bitcoin. What are the main features? What are the risks? So I think that's a good starting point. But you have to find a safe platform. So with a bit of research, I think on Google, you should be able to find a crypto platform where you can safely convert your ZAR to cryptocurrencies. And you can start with most platforms from 1 to 10 Rand. You don't have to start by investing your bonus into crypto. So on Luno, we're actually seeing most people, I think the average first deposit or the first buy transaction size is under 1,000 Rand. So most people start small. They start with less than 1,000 Rand. And once they're comfortable with how everything works, how the platform works, the processes and the different products, then they've got a bit more confidence and comfort to actually do more. And a lot of people, clients follow the Rand cost averaging method, where on a monthly basis, and we see the data literally on the 25th of each month, people set up the recurring payments and deposits, and they buy a little bit of crypto on a monthly basis. And that way, over time, they average out the price volatility, which is obviously very prevalent in the crypto market. So I think if you don't own crypto currently, you need to start doing a bit of research. Secondly, from a safe platform. And thirdly, start small, and gradually, as you gain more comfort, you can start to increase. But obviously, having said all of that, you first need to look at your budget and your expenses, and only once you've paid school fees and even paid pension, and you've got funds left that you need to crypto, then put a little bit of money into Bitcoin or cryptocurrencies.
Okay, the next question is about crypto scams. How do you spot one? Broad question. If you can give us your quick answer to that, Gaurav, if we can start with you.
Sure thing. I guess one of the ways that kind of raises my flags is I look at the history of the provider. If the person that's now providing this investment opportunity or whatever it is doesn't have much history, is maybe crypto only. Some of the guys that are offering financial products they claim to be crypto only, and they've got no track record of ever having done anything in any other space. That's obviously excluding Binance and Luno, who are also then very well known. They didn't just appear out of nowhere. They're very well known. And so if it looks like a small shop, not much presence on the internet, no history, then I immediately start getting suspicious to begin with. And then I'd say ask a lot of questions. Don't be afraid of knowledge that you should have. Anything that doesn't make sense to you, just ask lots of questions, and very quickly you'll start to see that the answers don't add up. That would be my recommendation.
All right, Brenton, you want to add something to that, please?
Yeah, so just a little foray before we get into some of the red flags. I think people tend to, and I think in South Africa it's a bit unfortunate. I mean, we all know the history of the scams here. People have this negative connotation attached to cryptocurrency and scams, but I think it's no different to the general sort of scammer modus operandi, right? So it's just the new hot thing at the moment. Previously, we saw it quite prevalent in the Forex sector. But I think one thing that's quite common across both those sort of scam environments, as well as those in cryptos, and particularly in crypto, your biggest red flag is when you get a guaranteed return. So nowhere in any market, other than your sort of fixed rate products, will you get guaranteed returns. So that is your first red flag. And I think secondly, there's a lot of common traits. So you get things like guaranteed returns, like Gaurav mentioned. They're usually quite resistant to questions. They've got no track record within any sort of financial industry space, any crypto asset space. So there's a number of red flags, but I think the top one is like celebrity endorsements, very, very high guaranteed returns. And to be honest, those are probably the two prevalent red flags. I mean, on Binance Academy, we have a few more, but my general advice is as soon as you see the word guaranteed return, just turn the other way and run.
Good. Rand, can you add something to that?
Yeah, very quickly. I mean, I think the underlying premise for me is anything that seems too good to be true is too good to be true, and especially when it comes to crypto. So if I looked at MTI and all these other scams that happened, when I looked at them on face value, these fund managers were purporting to be reporting returns better than the average or the best VC funds out there. And I'd never heard of these guys. I'd never seen any of the on-chain transactions. So I think the underlying premise is, if in crypto specifically, if it seems too good to be true, it definitely is too good to be true. Also, because crypto is a little bit more complicated than, say, buying art or buying a property, it's a little bit more complicated because there's technology involved. People take advantage of people's fear of the technology. So, they'll give you a technical line, something like we mine using 5,000 exahashes or whatever, something stupid. And then the average person looks at this and doesn't understand it, and therefore thinks, okay, I can invest in it. The idea is you've got to do your own research. It's like everything else in the world. If you don't do your own research, you do risk actually getting scammed. That's the basic scams. The second part of the scam, the second part of these the scams is because there's so much money flowing into crypto, and because there's so few regulations, scammers have seen this as an opportunity. There's so few regulations, no one even knows where crypto is regulated. If you get an SMS that comes from somewhere that points you to a exchange account and you put your name and your password, where does that get, which police should you report it to? Where are they going to find these people? So I think that unfortunately, because of the global nature of crypto and because it's so complicated and because it's so new and because there's so much money flowing into it, the scammers have seen crypto as an easy place to attack. And there are huge returns. If I have 1 second, I'll give you a very common scam that's actually happened to me. So on Instagram, they create a profile they copy all my photos with my profile picture, and then they name themselves Crypto Man Run, which they can do because there's no limitations. And then what they do is they get a list of all my friends and they message them. And my friends think it's me messaging them. And they eventually ask them for money. And some of my friends have actually given them money. In fact, we know of about $1 million that was sent to these scammers just trolling through my Instagram account from fake accounts. So scams are real. and regulation can't come quickly enough, but it is quite a complicated space to regulate.
So Rand, if I can just jump in there quickly, I did a tweet about the panel just before this, and I tagged you. And the first comment there was from a scammer who'd named himself Crypto Man Rand. So yeah, it's definitely something that we can see happening.
The thing that upsets me the most is that they are able to raise more money than I'm able to raise, which is strange. I'm kidding.
Yeah. I mean, I've actually trolled some of these guys, these scammers, and one of the tricks that they do is, I see Marius has gone offline. I was going to ask him the next question. One of the tricks that they do is to offer you a return, and I think you've all mentioned that, this sort of guaranteed return. We're going to double your money for you, and it's going to take 6 weeks or whatever. And you'll do a small transaction, and they actually will show you a profit. But that is really the come on for the bigger hit. And they're going to come back at you and say, okay, now let's go for round number 2. This time do 100,000. And I actually came across somebody in Durban, this, working class lady, nurse in one of the hospitals. She went and got a personal loan for 120,000 Rand and sent it off to this scammer. And then, when her profit fell due, then came the next part of it. You've got to now send tax. You've got to pay tax. Well, this guy is not collecting tax on behalf of South African Revenue Services. That's for sure. That's a scam. And the next thing is, there's going to be a release charge. So they start adding all of these additional obstacles and charges to the thing. Marius, if you're there, no, you've gone offline. Okay, so I think, Brenton, if you can pick up that one as well, because I think the exchanges, you're kind of at the front line of handling a lot of this. A lot of the traffic that you're getting is people who have been scammed or who are trying to do scams. How do you stay on top of that?
Absolutely. So personally, I can attest to Binance as a cryptocurrency exchange. Another thing I was probably digressing a bit, but people think crypto is, completely anonymous. We can't track anything. If you look at the on-chain analysis tools that are available at the moment, things like CipherTrace, I can promise you that the provenance of funds is far better on-chain than the current traditional financial system. And what that means is that by utilizing these on-chain tools, Binance as an entity, and there's been news articles about this globally, have been able to track down a number of these scammers, follow the flow of funds and freeze those funds and repatriate what we could sort of recover. But 2, we've also been able to be proactive in the sense that once we are able to tag these scam addresses, we can actually prevent users from withdrawing funds, or at the very least, provide them an initial verification step to say, hey, this is, a sort of red flagged address. Please be aware that this is what they do. Do you still want to proceed with the withdrawal? Because at the end of the day, we can't really restrict users. But I think from a proactive sense, that's what Binance is doing because it is so prevalent. But over and above proactive measures, like I said, reactively, we've recently assisted even the South African Revenue Services with a number of on-chain monitoring and sort of tracking down some of these scammers. So I think it's very twofold. Retail users have got to realize that the intricacies of cryptocurrency, right? So never send anyone your crypto because there is no customer service desk that you can phone. There is nobody who can reverse that transaction for you. So I think that's number one, just an important distinction to have. And then number 2, I think, because it's so new, it is quite a difficult sector to wrap your head around. I think some of the measures the exchanges like Binance have, for example, have been taking will definitely go a long way in protecting particularly new users from getting scammed. So I think it's a sort of two-edged effort. It's got to come from the retail users and the platforms as well to sort of try and keep their own users safe. All
right, Marius, are you hearing us? You're off.
Yes, good.
Okay, so I don't know if you heard what we were talking about there while you were offline, but I wanted to throw that same question at you: is how are you helping to track down the scammers? Because I know this is a lot of traffic that is being generated by scammers using exchanges in South Africa for the purchase of Bitcoin and then sending it off to dodgy addresses.
Yeah, Kieran, maybe just taking a step back also, I think in the minds of public, crypto is dominated by scammers and criminals. And I think, that is somewhat the case. Yes, you have people operating crypto that will take chances. But if you look at the data, and the particular data from Chainalysis, which is the leading crypto analytics company, then you'll see that the number of the percentage of illicit transactions in crypto is less than 1% of overall transactions. And when compared to the traditional financial system, it's more or less in line. And if we also consider that criminals use messaging applications and tools and chat apps on a daily basis to coordinate attacks, and I think we saw a good example recently in SA with the looting that happened. It was all orchestrated through WhatsApp and other chat channels. But we don't ban those systems because they provide a benefit to society at large. So same with crypto. I think one of the tips I can give is whenever someone reaches out to you via social media, walk away. You didn't contact that person first. Why would someone contact you directly on social media to offer to trade on your behalf? So I think immediately walk away. From Luno's perspective, we do a lot. We spend a lot of resources, time, and energy and money on compliance and making sure we have a safe platform. So a couple of the things we do, obviously from a KYC perspective, I think that's the first step, making sure that you can identify the clients on your platform, on your platform. That's very important. Secondly, more related to scams, is that we use third-party providers that scroll through social media and then take down scam pages. So you have all of these Luno Investments, Luno South Africa, Luno for Beginners, all of these groups on social media with admins that pretend to be Luno employees. So we take those down automatically and report them through third-party providers. And then similar to Binance, we also use third-party providers like Genesis to identify scam addresses. So whenever a Luno customer tries to send crypto from Luno to one of those blacklisted entities, which of MTI was one towards the end, we prevent our customers from doing that. Now that's completely different to the banking system. Your bank won't ever deny you, sending your rands to another bank account. That won't happen. But in crypto, we have to do that at this point to safeguard our customers and warn our clients, as Benton said, that you cannot reverse a Bitcoin transaction. Once it's processed, it's final. So we give our customers the information that they need before they make the final decision and decide to send the crypto out of Luno. So, but this is it's a big responsibility that sits on all of our shoulders. We can't, as an industry, say, well, people shouldn't be stupid. No, it's our responsibility to ensure that we empower our customers and we give them with the information that they need in order to make decisions and to decide whether something is a scam or not. So there's a big responsibility on our shoulders to ensure that the industry is safe and secure.
Okay. All right. We're heading up against the clock, as usual. Thanks for those answers. A question about altcoins. Altcoins, for those who don't know, that's anything other than Bitcoin. It's a crypto other than Bitcoin. Of course, a lot of action. If you're looking for these kind of these coins that grow at 10,000% or whatever ridiculous figure you can imagine, it's that which is attracting the interest of the very, very speculative, high-risk end of the investment market. So, Ran, if I can kick off with you. And by the way, there's a question here. Somebody wanted to know, how do they sign up for your crypto school?
So go to the Crypto Banter website. There's a button that says school. Go to school, click on the application form, and just follow the application form. Very simple. So it's cryptobanter.com, and there's a button there that says school applications. Just follow the lead there.
Okay, good. And then onto the altcoins. How do people evaluate that?
Look, it's a skill. It's a skill like, evaluating whether a company is a good company. The only difference is that people have been using and building tools to evaluate or value companies for many, many years. In tokens, it's a little bit different. So I think it's a minefield, and I think unless you're going to get involved in it full time or on a fairly consistent basis, then I think it's very much like throwing darts or following sentiment. So it's not an approach that I like to recommend. I see a lot of people following social sentiment. Chances are, if you're following social sentiment, by the time you're getting it, you're one of the last people to hear about it. And you know what happens. The last person to hear about it is also the last person out of it. So I think that I mean, I don't want to push our channel or stuff like that, but there are many good resources. Find the resources that you like. We have 4 daily shows now. We have 4 hours of daily programming. We cover, we have a technical show in the morning, which is all about charting. We have a fundamental show in the afternoons. We have a show called Microdose, which is a 10-minute, everything that happened on a crypto show in 10 minutes, but with no side effects. And then we have what we call In the Game, which is a show that we're launching today, which is all about which in-game NFT assets people should be buying. So which land in Splinterlands and which Axie in Axie Infinity and which NFTs inside games should people be buying, because it's a whole industry. So we cater for that. We've got a show for that too. So I think if you're going to get into altcoins, it's a minefield. 99.9% of them are garbage and will fail. And the skill is to try and find that 0.1% before anybody else does. And that requires lots of hard work and research.
Okay. Gaurav, you want to pick up that altcoins? You've got an index there, and you've selected some altcoins. I think, if I remember correctly, you've got Cardano and Polkadot up there. Maybe explain, if people are going to go that way, then how should they start selecting them?
Yeah, so Kieran, I guess just very much like the traditional sector, there are many approaches to this. And Ram was talking about different shows that potentially take different approaches, charting, fundamentals, etc. I've always personally had a lean towards fundamentals. And so when it comes to this space, there are also fundamentals behind a lot of these altcoins. And so it's very important then to start trying to understand. Now, there is a lot of content out there. So there isn't necessarily a shortage of content if you want to look for it. And so behind all of these coins, there's often technology. And the important thing to understand is how tested and safe is the technology, how much has it been used? Obviously, the more it's been used and the longer it's been around, the less chance that there are security exploits or problems with it that people have not yet found. But nonetheless, there is still that chance. It's kind of famously called the Lindy effect. The longer something's been around for, the more likely it is to still be around. And then understanding what you think are the use cases for this. So kind of lots of people publish use cases, and it needs to make sense to you. If it doesn't make sense to you, then potentially you're not understanding it, but it's safer than not to be in it. If you start to see the use of the technology, how it could improve things, how it could make transactions cheaper or bring new utility to new industries, that's important. And then also what's very important, which we don't necessarily have to worry about as much in the financial sector, in the traditional sector, is something called tokenomics. And tokenomics is how the tokens are issued or burnt, and that being that the tokens cease to exist, and what the plans for that are. That's also very important. And then there are numerous things that are unique to, so all the points I kind of raised above are actually quite relevant to any investment. And then there are things that are unique to cryptocurrencies. So how centralized is the supply? Because that means that people can change it. Are there admin keys? Again, that involves a few people having control and being able to take all the money that's invested in a protocol. So there isn't a shortage of content, but I would say don't venture into something without doing a lot of research and understanding every facet of it that you can.
Okay. I think also on the altcoin side, Brenton, I want you to come in on that, and then Marius, and we're going to have to wrap it up there. But looking at the business case, it's very difficult in cryptos because we're at the birth of something. We don't have a 20-year track record to measure what the income stream is. So you're really making a guess. If you're betting on Cardano being, as they say, the Ethereum killer, you're betting on it actually making a huge amount of revenue going forward. And that's a little bit of an impossibility to know at this point. But Brenton, give us your thoughts on this.
So interestingly enough, from a personal perspective, before I discovered crypto and went down the rabbit hole, I was a quant and a bit of a hobby data scientist. So I actually have extensive models around valuation. So, there's, like Rand said, if you're not going to get into this full time, please don't go too deep, because everything from the tokenomics, which sort of relies on a fair understanding of game theory within economics, how incentive structures are sort of put together, sort of played out within the networks. But I do think sometimes people try to create too much of a disconnect. So, one of our speakers mentioned storage, right? So that's something we all understand. So in terms of going to an addressable market, what is the size of AWS's current storage business? Does this protocol offer any competitive advantages to Amazon, right? So there we've got a starting point in that if Amazon storage business is a $300 billion annual industry growing at 10% a year, we've got suddenly an addressable market for what this token could then, accrue in value. And then when you start looking at how many tokens they are, it gives you an indication of what the potential price could be. I forgot to mention, this is not financial advice. But I think, it is quite difficult for the average person to do that, which is why, Binance Academy, for example, I think first from a listing perspective, people know Binance for all the altcoins we have. But interestingly enough, less than 2% of tokens that apply to Binance actually get listed. So they all go through a rigorous vetting process. So Binance does that due diligence of making sure it's a legitimate project. They've got a team that, the code is up to scratch, which means that you're already looking at, when you log on to Binance, quite a high quality, so to speak, selection of assets. And then if you go further into Binance Academy and Binance Research, they've sort of condensed all this information that you need to know, tokenomics, the track record of the founders and things like that, all into very nice readable articles. So it does give you that start in terms of understanding what the project is, what it does, who the founders are. But I think I'll just end off with one thing that I've found, again, personally, to be the most indicative of early stage project success. And that has really been the team behind it. So if you see a project with an all-star team, meaning, they've got a high degree of corporate expertise in, if you're going into storage, ideally you want somebody who has a background in the storage space, quite a number of credentials. So that is something that I think we grasp a lot easier, right? If there's somebody with a PhD in, networking protocols and they've developed something, it's highly probable that it's of value. Whereas if you have some random teenager in their basement launching a coin and hyping it out, it's far less likely that there is some value contained within that project. So I think, that's it from my side on altcoins.
Okay. And exactly. What's the track record of the people? Can you check them out? Do they have offices? Do they have a phone number? Does the website have misspelling and bad grammar? Is it a Google Translate thing? These are just very, very quick and dirty kind of checks that you can do on something. Gentlemen, thank you very much for that. We're going to leave it there.